Hey, good afternoon, everyone. Just after noon time on Wednesday, August 23rd. And as Forex Brizio, back with another video and just a little recap of the morning price action using the Williams percent range strategy that I made the video on yesterday, or last evening, I guess it was, or yesterday afternoon. So I'm back with that, and just going to run through a couple of charts. Not going to spend too much time here, but there were some interesting setups that occurred today as I backtest this. And I also want to point out some times in the past when maybe this didn't work, if you were using just the indicator for signals. So I'm not going to rehash the whole methodology. Watch the video I posted yesterday. That'll tell you what how I set the indicator up. And again, the only indicator on here is the Williams percent range set to a period of 55. Okay, other than this, the default setting is 14. I made it 55, which greatly smooths it out. And also for the levels again, I'm using the minus 30 and minus 70. Okay. It may default on your platform to minus 20 and minus 80, which would spread them out a little bit more. It would move the 30 up a little bit, move the negative 70 down a little bit. And again, this is a fixed range indicator, meaning that it has a high range of 0 up here. I know you can't see the extreme right side of my screen, but basically at this line right here is 0, and then all the way down at the bottom here it's minus 100. That's the range. So some indicators are dynamic where the range will keep expanding or contracting based on where it goes. This does not, which is why when price gets into either the overbought or the overbought or oversold area, it'll just start moving sideways like this because it can't go any further. It's a fixed range indicator. Okay, but that doesn't mean that just because the price is up here, it's going to reverse, and it doesn't mean that because it's chopping around sideways, mean it's running out of up momentum in this case, okay? Because it can't go any further. It's just the parameter set by the indicator, okay? So don't be fooled by this kind of stuff. We're like, oh, it's moving sideways. It's running out of momentum. No, this is just the indicator setting saying, hey, we can't go any higher, or down here, we can't go any lower, okay? But this trend is still in place until the price tells you otherwise, right? Okay, so I just wanted to kind of get that out there because I don't think I mentioned that yesterday in how this indicator calculates. Some indicators, like I said, are dynamic, where this space in here adjusts based on the momentum of the price, and it'll just keep expanding. So theoretically, this line could just keep going up. But on this indicator, which is not common, this is a fixed indicator, and it ranges between 0 and minus 100. So again, I use 55 for the period, and I use minus 30, minus 70 as these two levels. I don't use the mid-range, the 50 level, I took it out. So you can either use minus 30, minus 70, or minus 20, minus 80. The minus 20, minus 80 will get you a little bit sooner entry on good entry signals, but it will also potentially generate more false signals. But on the flip side, the minus 30, minus 70 might get you in a little bit later, and you might, potentially even miss a trade or two, because price may not, get back to a certain level. So there's give and take in any settings, guys. But this is what I have defaulted to, and so at least in the Forex market. So, all right. So here's the euro dollar. So let's get to today's price action. Here's euro dollar. Okay, so here was our New York Open. Okay, again, I have this session indicator on here just so you can kind of see. I only trade New York, so here's the New York Open. You can see we chopped around a little bit. The indicator was sitting in the oversold range at the open. So right there, something like that would tell me that, okay, I'm certainly not looking for any short positions because this is already an oversold. But again, it doesn't mean that it couldn't just keep going lower, okay, because it most certainly could. Because this indicator is not going to tell you that because it won't go any lower than right here, okay, at minus 100. Okay, it won't go any lower. So, but I'm not looking for any shorts based on that. However, I would consider a long position if it breaks out, and that's what we had at about 5 minutes after 9 o'clock, so an hour after the open, which is a pretty safe bet. We had price break. You see I had this trend line drawn right here. and we got that. Plus, we had a break on in the oscillator, and price proceeded to go up. Let's say, I don't know, even conservatively, you got in up here, you'd be up 45 pips right now on a day trade. Okay, so not bad. And price is still going up, and you can see that the indicator is also, staying in this overbought region, but again, it can't go any higher to the upside here, so it's just undulating with the little ups and downs of the price, on the indicator. Okay, but it's very, very important. I want to stress again, just because it's in the overbought region doesn't mean it's going to turn down, and just because it's chopping like this doesn't mean it's running out of momentum. It's simply a factor of the indicator not allowing it to go any further. Okay, so I really want to stress that because I did not mention that yesterday. Okay, so that is a really good trade and indication of how this works. Now I want to show you something where the limitation of what I just told you about the indicator not allowing anything higher than 0 or below minus 100. And this goes back to yesterday, right here. You can see when New York opened, price was already in the oversold area, okay? And so I'm not looking for any short positions, but what did price do? It went down 50 pips all the way through, what was the low here? 1740, so 2.5 hours into the session till about 10:30 New York time, and then price just kind of went to sleep the rest of the day. It corrected back up and then just went sideways the rest of the day. Okay? But there is no sell signal here because the sell signal actually happened way back here during the London session, and it just continued into New York. And you can see that we had price chopping around, and again, it can't go any lower than this because that's the limitation of the indicator, but yet there was a good trade here. So I wanted to point out when this may not work, or when, if you're using this as an entry signal, how you might miss trades. And the reason why this happened, guys, is just because we had very strong momentum coming into New York to sell the euro dollar. And so the price never really reacted and never really went higher for you to get, another signal to go short. In fact, even if I went to a 1 minute time frame, it's not going to be any better because you can see how low this is. It wouldn't have gotten back up into here even on a 1 minute time frame. And so, I did want to point that out, where this is an example where you would lose out on a trade. Not that you lost the trade, but you didn't get a sell signal here based on the indicator. Okay, it's really important that you back test and look at this and understand where this will work and where it will not. And if you have a strongly trending market coming into a session, then expect that you may miss out on that trade if you're just using the indicator. Now, if you wanted to just go short here anyways based on some other methodology, great, fantastic. You wanted to use a structure break below this low, for instance, and just say, okay, let's try a trade right here. We're already more than a half hour into the session, but you stop up here, fine. That still would have worked out too. But I'm saying if you're going to trade this just based on the indicator, then you did not get an entry, even though this was a good trade. Let's just scroll back since we're staying on the euro for now. Let's see. We go back to Monday. There was a good signal here coming into New York. We were in the overbought zone. Okay, we had price start to move down, came out of this zone. Okay, now another thing I wanted to point out, guys, is that, again, now this is only 10 minutes into the New York session. I told you that generally trading during that first 30 to 60 minutes, sometimes even later, into New York can be risky because of early price manipulation. Well, on this day, there really wasn't. The price went down. It didn't go a ton, 30 pips or so, but it did go down before it reversed later in the morning. But sometimes, if you're going to follow the indicator, you just have to take the risk and understand that when you're trading, especially on such a short time frame, you are going to get, stopped out, maybe as many times as you win. And you shouldn't be discouraged at that because your stop losses will be small. And, of course, you should be practicing good risk management, not over-leveraging your account. So if you do, get stopped out of half of these signals, it's not going to really hurt you, and you'll make it back on the ones that you win on. So let's say you went short right here. It's early on. You say, okay, well, it's a little risky because we're only 10 minutes into the session. You go short right here. You put your stop, a couple of pips above this swing right here. Well, this one would have worked out, okay? But there's other times where you'll have that price manipulation. Price will go down a little bit, and then boom, it'll shoot back up, and you'll be taken out. That's going to happen, okay? But if you're taking the signals as they come, this was an entry right here, all right? The other thing I wanted to point out in terms of how this indicator reacts is that it is a very sensitive indicator. So by the time you get an entry signal, it is quite possible that this, for instance, on this short, that by the time you get a signal and it looks good on the price, that the indicator has actually gone pretty far below, and that's okay. It's a very sensitive indicator. As long as it's moving in the direction of the signal, then you're okay. All right? That's not really the case here, but depending how aggressive the move down is, you could have like a big candle here, and you're waiting for the close. By the time it closes, the indicator is already down in the mid-range here. That's okay. All right? It's still a valid signal. Okay? Because, again, it's a very sensitive indicator. All right, so if we move on here, this goes back to last Friday. You can see at the open, okay, we were already kind of in the oversold area, so I would not have taken this short, okay, but this was a valid long position right here. Could have gotten in right here. Now, it didn't go very far, 20, maybe you picked up 20 pips. But this is a Friday. It just probably wasn't much volatility. Price just kind of like wandered back up, and then you can see it went to sleep very early. I mean, it started moving sideways only 2.5 hours into the market and didn't do anything the rest of the day. But this is a typical Friday, especially in the summer. So I'm not really surprised by this. But there was a trade here, okay? You would have ignored this long, take this short. Maybe you would have picked up 15, 20 pips. Not a big trade, but there was a trade there. Okay, so this one, so this goes back to last Thursday. So you can see heading into the New York session, we were in the overbought area and price moved up, so I would not have taken this long. Now again, just like I showed you on the other chart when it was going down, in this case it could have just kept going up and stayed in this overbought zone. But I would have ignored all this buying, okay? And then finally at this point right here, which was almost 2 hours into the session, we got a sell signal. You can see where the indicator is breaking below. Let's say you got in at the close of this candle, all right? And if you held it all the way down, it's 40 pips through the end of the trading session, okay? So you ignore this because it's already an overbought, and you take this one, all right? Same thing. Well, let's see. This goes back to last Wednesday. You can see heading into New York, we had now this is a tricky one, okay? You may have taken a loss on this one, but then hopefully you got it back, okay? Heading into New York, we were heading down, but the oscillator was in the oversold area, so there's no trade on this short. Now right here, we get a long signal at the close of this candle. This looks really aggressive, right? I probably would have taken this. I wasn't trading this last week, but I probably would have taken this, quite honestly. Maybe right here at the close of this candle or this one, it went up, 8, 9, 10 pips, and then boom, we got this big sell-off. So if you went long here, had your stop maybe, down here or down here, you would have been taken out of this trade, somewhere on this first initial push down. Certainly on this candle, you would have been stopped out. The sell signal actually came right about here, this candle or this candle. So let's say, anyway, you either closed the long or you got stopped out, and you held this for the, all the way down. This was the real move of the day. It was 36 pips. So maybe you lost 10 pips, but you made 36. So, you still netted out at least a 2 to 1, 2.5 to 1 risk to reward ratio on this trade. But this is tricky. This is just classic price manipulation. Down, you figure this is the manipulation, then it goes up, but no, the real move still was down, okay? And that happened actually the day before, same thing. Went into the session with the indicator below, in the oversold area. Price shot up. Okay, went up for, this is probably 10, 15 pips. And then we went down. It was the exact same thing that we had the next day. Okay, so again, maybe you took a loss here of 10 pips or so. And then we had a sell signal maybe right here. And if you held it to the end of the day, 35 pips. So you still would have ended up plus 20, 25 pips, even if you took a loss on the initial long. Okay, so I just wanted to point that out. Let's see here on the, I'm just picking a random, let's say the Canadian yen. So here was our New York session, heading into the session. Now this one, there's no, this is another one you probably would have just missed out on, right? There was no signal here. New York opened with the oscillator right in the middle of the range. Okay, so this just tells me not a lot of momentum. So there's certainly no long here, but you really didn't get a short signal either because the oscillator never made it back up into the overbought area. It just kind of stalled out right in the middle here and went down. So this is a missed trade. Okay, and again, this is going to happen, right? You missed out on really a nice trade, 60 pips, okay? And you have to just kind of use your own judgment. So you can see I have this trend line drawn on the higher time frame. There it is on the 1 hour, and you can see price went right up to that trend line, rejected, and went down. So again, like I showed you on the euro dollar, you could have maybe alternately used a structure break and maybe taken a short right here, and you still would have picked up maybe, 30 pips or so to the downside. Okay, and now we're pushing back up here later in the day. All right, so this is another one where you didn't get the signal. So either you don't trade this or you have to use an alternate method to enter. Okay, so when there is a good signal, you can do both, right? You can use the indicator for the signal and then confirm it with a structure break if you want. Okay. Let's look at the Aussie dollar. This was a beautiful trade. So here was the Aussie dollar going into New York. What do we have? We had price going down, consolidating to down. Okay, back to these lows. You can see the indicator in the oversold zone. And then, I had this trend line I drew on here. And then boom, right here, price broke above. Depending how aggressive you wanted to be, maybe at the close of this candle right here, when the oscillator took out this little swing right here, like see where the oscillator tried to break above earlier. So when it takes that out, which would have been on this candle right here, okay, and right now if you were in this trade, you'd be up almost 50 pips, all right? And you can see the oscillator chopping around in here because, again, it can't go any higher. It is late in the day or late in the session. London's closed now, so I don't anticipate this will do much the rest of the day, but there you go, okay? Textbook setup, textbook entry, everything really, worked out really well with this one. All right. Euro GBP. I'm undecided whether I'm going to keep following this pair. It does show good volatility generally during the New York session, but it's not a North American pair. It doesn't have a currency associated with it. Obviously, it's the euro and the pound. And I'm just really maybe have a psychological bias against this pair. But anyways, but yet this one, although sloppy, would have worked out because here we are in the New York session. We open higher with the oscillator in the overbought zone. We don't get a signal to go short until really probably at the close of this candle right here. So we'd be up about 11 pips on this pair. If you took it, I did not take it. I just didn't like it. It was very choppy. It was coming out of some very impulsive price action. So I just didn't take it. So, and it's 11 pips. Yeah, I would take 11 pips, but I didn't take it. So this one was not great. Although technically there is a signal, like I said. Probably at the close of this candle right here, this bearish candle, you could have gone in, and again, you'd be up about 11 pips. Okay? And again, it's now after the London close. This pair for sure will just peter out now the rest of the day because London's closed and that's it. So it's not going to do anything the rest of the day. All right. What else? I don't know. Dollar CAD. Okay, dollar CAD, another textbook setup. All right, going into New York, price was going up. And again, it could have just kept going because the oscillator's in overbought and not moving any higher. It cannot move any higher. But you can see it's going up. All right, the oscillator is in overbought, so I would not have taken this long. And then at an hour and a half into the session, maybe an hour and 40 minutes into the session, at the close of this candle right here, we get a signal to go short. And if you were in this trade, you'd still be in at plus 63 pips right now. All right. So now I want to show you this one since I'm just looking at it. I hadn't pre-thought this one, but yesterday on the dollar Canadian, we had a signal to go long right here, right at the open. Okay, so here we are only a half hour into the open. Price open lower, so we're not looking for a short position here because the oscillator is in oversold. But we do get this, and so this is technically an entry. Now it's a half hour into the open, so that's fine. I usually say, wait at least 30 minutes, into the open. Sometimes it takes, like I said, sometimes you don't get a signal till an hour, hour and a half, into the session. But in this case, half hour in, you had a long signal right here. And if you took it all the way, if you happen to, nail it at the top, which you may not have, but if you did, it's anywhere from 25 to 45 pips, right? And you missed out on 20 pips here if you let this pull back. But then again, if you had stayed with it, you would have got back to your 45 because it never took out this structure right here. Okay? Never took out these lows right here. So this did go back up. So theoretically, you had 45 pips you would have made on this trade. So there's a trade, even though there was no real manipulation at the open. There just must have been a lot of buying, ready to go right at the New York Open. That's going to happen sometimes. If we go back an extra day, it was the same thing in New York the day before, right? Buying right at the open. Here was your signal right here, based on the oscillator right in here. Price went up. Okay. Let's look at this day. So on this day, again, price opens with the oscillator in the overbought area and price going up, so we would not be looking for any longs here. There was a short, though, right here. Now, this is not a great fill. You can see you get your short here. It goes down 11 pips, comes back against you, 12 pips, and then ultimately goes down 22 pips. So as long as you were able to ride out this little retracement here, you could have squeezed 22 pips out of here. Hopefully you put your stop above this swing, not right above your entry price, because it obviously would have taken you out if you put your stop above your entry. Put it up, a couple of, at least one swing further away, which would have been up above the opening high, and you would have been fine. All right. The day before, I'm just going through some of these as I see them, guys. All right. Price opens lower. There's no signal really here. I mean, I guess potentially there's a long right here, but that's right at the open. I would have ignored that. This one, maybe you took this. The trade still would have worked out. Now, depending where your stop was, you would have had to make sure you cleared this retracement back to the here. But even if you got a bad entry right here, you still would have made 40 pips on this trade. And if you took this signal right here, which was the actual signal, you would have had about 36 pips. So this actually was a better risk to reward ratio, even though you would have had to be more careful with your stop loss. All right. So there you go. So guys, I just keep beating a dead horse here, but so again, just to review, it is a great strategy, and again, you can use this on any time frame. These happen to be 5-minute trades. These are day trades, obviously. But keep in mind what I said earlier. First thing first, the indicator has a fixed range between 0 and negative 100. So just because something's in overbought or oversold doesn't mean it won't stay there, because it can't go any lower or any higher. So don't automatically assume that means it's going to reverse. And if you're in a trade and the price, let's say you were in this long, right? And you're saying, well, price has been up here in the overbought area, it's chopping around, I'm going to get out of it. No, it can't go any further. If it could, it would have on all this up move, okay? So keep in mind the fixed range, and keep in mind that there's going to occasionally be a mistrade where price opens up and just keeps going, continues the London session, and you don't get a signal. And I showed you that on the euro dollar a little bit earlier on, which one was it? Oh, this one right here. Right? Price was already in oversold when New York opened, and it just kept going down. Okay? And also on this day, the next day, same thing. Price was already oversold in the oscillator, and it was just kept going down. So on days like this, guys, you can look for, if you get any little correction, like right here below this little structure, or here where I have this line drawn. If you want an alternate means to enter, if you still really want to try to take a trade, this would be my suggestion. Wait for a structure break on the 5-minute, and take that candle close, put your stop here, and just leave it alone. If you get stopped out, you get stopped out. So, all right. And again, guys, be prepared for 50% stop out rate on this. Although what I just showed you, you may have only had about, out of all the trades I just reviewed, if you taken all those, your win rate probably was more like 70%. There was a few I think maybe you would have gotten taken out on, at least initially. But overall, it's pretty good. So I just did want to review some of these as a follow-up to yesterday, including look a little bit at some of the stuff that happened today during the first half of New York. Again, afternoon session, probably not interested in trading anything, even if price does reverse, because it's just after London closes, things just become very quiet, and a lot of these moves are not sustainable. So that's it, guys. And these are the only pairs I'm looking at right now. Anyways, initially for this strategy, it's 1, 2, 3, 4, 5, 6, 7, 8 pairs that I'm looking at. That's it. As I play around with this, I may expand it out a little bit, but I may add a few more. But there's plenty of opportunities. You can see almost every pair I showed you guys had an opportunity today. There's the Aussie Swiss. The Aussie, really strengthened today, because you can see the Aussie dollar and the Aussie Swiss both rocketed. So we obviously had some positive sentiment going on with the Aussie today. So I mean, just about every pair I showed you had an opportunity today. So, you don't really need to have 20 pairs you're looking at, because if you do, your risk of overtrading is going to remarkably go up. So I would say, at least when you initially trial this, keep it to a handful of pairs, maybe only 1 or 2, and see what you think. Go and back test it. Again, very, very easy to back test this. All right, you just go back as many days as you want and just back test it and see what you get. Right, and I think you're going to find that most pairs are going to have at least some kind of entry every day. Might not go very far, especially if it's like a Friday. Don't expect big moves on a Friday unless there's, NFP or some other news. Fridays would generally be pretty muted, but the rest of the week, it's pretty much game on, so especially midweek, Tuesday, Wednesday, Thursday in particular. So that's it, guys. I'm going to leave it there. Questions, comments, please leave them below. Smash that like button. It helps out the YouTube algorithm tremendously. And if you're just finding the channel, hit the subscribe button, ring the bell notification so you get notified when I post new content, which I admittedly am sporadic on, but on average once or twice per week. I'll keep reviewing these, and I hope you guys just go and back test it. Again, use proper risk management. These are 5-minute time frames, so don't load up too much. You do have to generally tend to be a little bit higher on your lot size with these trades, because they are only 5-minute trades. So if you have your lot size too small, you might win, but you're not going to make very much money. But practice good risk management. Don't over leverage it. And if you really want to, you can certainly, like I said, you can trade this on any time frame, guys. If you want to swing trade it, then just go to the 1 hour or the 4 hour and look for entries, right? It's going to be the same exact process. The only difference is that your take profit and your stop loss levels are going to be bigger, so you have to position size accordingly, okay, versus trading on a 5-minute, chart for a day trade. But this will work perfectly fine on higher time frames as well. So if you're not comfortable or you don't have the time to look at 5-minute charts, do it on a 1 to 4 hour chart. Okay, it actually could be advantageous not only for your time, but you don't have to make such a quick decision because the candles aren't moving as fast, right? You got time for 1 hour and 4 hour candles to close before you have to make a trading decision. All right. So anyways, guys, I'll leave it there. Have a great rest of your day. Let me know what you think, and I'll talk to everybody soon.